Down day today in our third trading day of the month for us. We're still up on the month a little bit. We had a good day getting in intraday on Tuesday, a little gain yesterday. Today we were up a little bit, and then the market came rolling back over. PPI came out today, hotter than expected. The bulls still tried to rally it, very stubborn tape to move higher. Let's look at the trades on the day. These are the results, as you can see. And we'll go over the monthly cycle analysis as well. Tick wave was one of the trades of the day. It did capture the short side. Momentum reversal was up on the day. I thought the market would close the gap and try to move higher. Didn't make sense for it to do that to me, but the market seems to want to go up on bad news and fight the fundamentals, fight the Fed. We had CPI, Consumer Price Index, on Tuesday, hotter than expected. Market was back and forth, but propped up from these lows. And then yesterday the market rallied again. And then we're looking at the S&P today, and then the market gapped down on producer price index, which came out at 730. Big gap down, rallied back, and then during the last hour it just rolled over on us. And so some of these long trades were stopped out. And let's go over the trades on the day. S&P strategies were up. Mirror took the initial gap up trade, and then Tick Wave got short. And so with Tick Wave and Mirror, along with the momentum reversal, the net gain, there was a net gain on the S&P today. And so those are the trades on the S&P. 2 for 3. The Nasdaq are two biggest winners recently. Tick reversal, we're down on the day. Tick reversal got long, market rolled over here. This one got long again, and then tried to go short. And so these two were down on the day. The biggest losers on the day have been some of our strongest strategies, and that is the cycle of trading systems and why we use the portfolios. Momentum reversal, down on the day. It had a big gain yesterday, stopped out today on that rollover. And then Viper had a nice day on the short side. So most of the Nasdaq strategies mostly tried to go long today. And the market gapped down and then rallied back. And I thought the market would be down today, and it was, but not much lower than its open. And so even though it rolled over at the end of the day, it chopped around at the lows of the day once it rolled over. So it didn't trade much below the opening range lows. And Viper had a very good day, up 17.25, 3 for 3 on Viper, taking these strategic short trades on the day. So overall, the Nasdaq strategies were one winner out of 4 strategies that traded today, and minus 39.50 on the 250K portfolio, trading 1 E-mini, minus 800 trading 2 micros on the 50K portfolio. On the month, we're only up 12.25. The hypotheticals for the month are minus 27.55. Let's look at what happened for this portfolio setup in the previous 2 months, December and January. Same sort of scenario. If you look at starting on December the 1st, if you go through December the 20th, when today is the 16th, so it's through December the 20th, and Monday is a holiday, by the way. So we have 1 trading day left, then we have Monday as a holiday, and then we have 6 trading days left in the month, with the Tuesday is the first trading day next week. And so what we're looking at here is December the 1st through December the 20th was minus 3,200 last month, or in December, and then from December the 21st through December the 30th, plus 33K. Plus 33K in that last several trading days. And then in January through the 19th, January 1st through the 19th, so the first 20 through the 20th in December and through the 19th in January, you see minus 18K. So you're minus 18K in January through the 19th, and then the 20th to the 31st, you're plus 34K. So very similar, plus 33K from the 20th to the 30th, and then plus 34K 20th through the 31st in January. And so maybe this monthly pattern will exist We don't have all the dates. We don't have the 14th or 15th or 16th in here, but if we did, that would show minus 27.55 on the month. Tomorrow is the 17th, and then we have the 18th on Saturday, 19th on Sunday. 20 is a holiday, and the 21st. And so, if the cycle repeats, we're looking for a possible move higher in the equity curve. Fridays are also good days, and so looking forward to tomorrow's trade as well. What's interesting is we haven't seen that many tick highs in this market, and so even on days like this, the tick high was below 1,000, and today the tick high was below 1,000, even though it's rallying into here. Over here you had a plus 1,000 day. I think the high on this day was below 1,000, even though there was a pretty strong rally on, I guess this was Monday. And on Tuesday, we did go above 1,000 in this wild CPI trade. And so the market continues to try to trade like a QE type stealth bull market. It's interesting, very stubborn and interesting. No matter what, there's just a sell-off. We're going to pop it back up. Sell-off. We're going to pop it back up. Finally got some selling into the close. It makes sense. But let's see. We're up on the week though. Here's last Friday's close. We're right around last Friday's close. Actually, maybe a little bit lower. So we're at last Friday's close. We are due for a big down day. We haven't had a big down day in a while. Today's kind of a big down day, but I'm talking a bigger down day, more panicky, selling at the lows, selling from the open to the close. We haven't had one of those in a long time. And if I look back at my strategies, it's been mainly fighting the short since last April and certainly since last June. So we're closing in on a year now where the market has been trying to prop up the market, and there hasn't been much ebb and flow. It's mainly been dip buying and propping up since April to June timeframe. And then it's been a while since we've had big days on the short side, consistently big days on the short side. And with this higher than expected inflation on Tuesday CPI, higher than expected inflation today on PPI, and the market rolling over into last Friday's close, we should be, it'd be ideal to have the market not gap down big. We don't want a huge gap down and then volatility. But it'd be ideal to have it trade higher or around today's close and then sell off into the weekend. We're up for a trend in either direction. It'd be nice to have a nice trend in this market because we've been somewhat congested. We talked about that yesterday. We're pretty much in the range of the first 2 days of the trading month, and so looking forward to a trend at some point this month, a breakout of this congested range, back and forth price action in the stock index futures. These are the trades on the day for Thursday, February 16th, 2023. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.